Yo guys, what's up? Back with another video, and today I'm going to talk about difficulties in counting national income. So let's get started. Number 1, problem of double counting. The greatest difficulty in calculating national income is of double counting. It arises from the failure to distinguish properly between a final product and an intermediate product. For example, flour used by the bakery is an intermediate product and that for a household is a final product. Number 2, existence of non-monetized sector. India, especially in rural areas, there exist non-monetized sectors. Agriculture still being in the nature of subsistence farming, a major part of production is partly exchanged for other goods and services. It is excluded while counting national income. Number 3, inadequate and unreliable data. Adequate and correct data on production and cost data relating to crops, fisheries, animal husbandry, small enterprises, etc. are not available in developing countries like India. Besides this, data on unearned incomes, consumption, and investment expenditure of rural and urban population are also not available. This does not reveal the actual size of national income. Number 4, depreciation. Depreciation refers to wear and tear of capital assets due to their use in process of production. There are no uniform or common rates of depreciation, thus it is difficult to make and correct deduction for depreciation. Number 5, capital gains or losses. Capital gains or capital losses which occur to property owners by increase and decrease in the market value of the capital assets or changes in demands are not included in the national income because these changes do not result from economic activities. Number 6, illiteracy and ignorance. Due to ignorance and illiteracy, small producers do not keep an account of the production, so they cannot give information about quantity or value of their output. Number 7, difficulties in the classification of working population. In India, working population is not clearly defined. For instance, farmers in India are not engaged in agriculture around the year. Obviously, in off seasons, they engage themselves in alternate occupations. In such a case, it is very difficult to identify their income from a particular occupation. Number 8, valuation of inventories. Raw materials, intermediate goods, semi-product, semi-finished products, final products in the stock of producers are known as inventories. Any mistakes in measuring the value of inventory will distort the value of the final production of the producer. Therefore, valuation of inventories requires careful assessment. So yes guys, so now let's begin with the features of national income. Number 1, macroeconomic concept. National income represents income of the economy as a whole rather than an individual. Hence, it is a macroeconomic concept. Number 2, value of only final goods and services. In order to avoid double counting in national income, the value of only final goods and services produced in the economy are considered. The value of intermediate goods or raw materials is not considered. For example, while estimating the production of shirts, there is no need to take the value of cotton as it's already added in the price of the shirts. Net aggregate value. National income includes net value of goods and services produced and does not include depreciation cost. Number 4, net income from abroad. National income includes net income from abroad. For example, the difference between the value of import and export, the net difference between the received from abroad and the payments made abroad. Number 5, financial year. National income is always expressed with reference to a time period in India. It's from 1st April to 31st March. Number 6, flow concept. National income is a flow concept as it shows flow of goods and services produced in the economy during a year. Number 7, money value. National income is always expressed in monetary terms. It represents it only represents those goods which are only exchanged for money. So yes,